small ADR session inside of the RD session. That's like the contraction model. Contraction always means market is RDR is over. So as expected, we came from an upside expansion over here. So that was the last RDR. This was a downside expansion model, which is like kind of a retracement into the previous move. So let's see how we will continue this week. So ADR is opening. So we have direct confirmations, 2 volume imbalances over here, 1, 2. Let's see if price, like best case in this scenario, price is coming down, closes the volume imbalances and continues to go up. So we will look for a long entry in this setup. That's enough for me. So I'll get a volume imbalance over here. We are closing these 2 volume imbalances, which were on the downside. So I'm going directly long with stop 2 ticks below the midpoint. Target. We have to take the standard deviation over here. That's our trade. We are in, we are long, let's go. Let's see. We're not stopped out yet. Low 8975. Yeah, we're stopped out. Stopped out now. So we will still keep on looking for a long trade. Let's see. Okay, clear rejection again. That's what I'm saying. Like for me, enough sign that market wants to go up. Everything is clear. So I lost already 1 hour, but I have to do literally the same trade again. So I'm entering here. Stop goes again 1, 2 ticks below this. And target is like the last time, the standard deviation. So let's see. If I lose this trade, session is done. So no more trades for me. Ooh. That was close. That was literally 1 tick. So we are leaving a volume imbalance. So let's see. Volume imbalance, price returns, fills it again. So stop goes on entry now. So no need to risk anything here anymore. Close, almost getting filled here. 3.9. So we are filled 5.8. So let's make 5.5 out of it. So we are 21 now. So rejection from the 0.5 standard deviation level here from the IDR session. So this volume imbalance doesn't even get touched anymore. So no entries for us. Like I would take maybe another entry if we come down here and clearly reject from here. But so far that's not happening. So 120 ADR is almost done. We're going higher and now it's too late to take any trades. So there is nothing I can see, even though it's looking nice now in hindsight, but like I can't see anything. So there is no, I mean, you could have taken from the RDR, the high over here. But to be fair, I was not looking at it right now. You see the rejections over here. So you could have taken another one, but as you could see real and in live, I was not even looking at it right now. So I missed that one, but that could have been another nice entry over here. Let's continue. So now we're coming to the 1 standard deviation. You see that to the tick, rejecting from this one for now. So now we are already in the ODR session. Again, nice rejection from the 1 and now we are breaking through it. But you see that? Like even the standard deviation levels are very important. So now this one is a contraction ADR session and now we are squeezing to the top. So even though I don't even know what is happening right here, I would look for a long entry potentially. Let's see if there is something interesting for us. Let's mark it out. So this is a very important resistance area. And over here. So we also have the 0.5 standard deviation level over here, which is also very important. So let's see. So we close below, immediately go back above the 0.5 standard deviation. Price is coming up there, 0.5 mid, and we have another 10 minutes. We can also extend these lines here. And this one goes aligned with the mid levels over here. Based on what I said. So RDR session, small ADR session inside of the RD session. That's like the contraction model I was talking about last time. And then like this means contraction always means market is fueling up, and we're gonna see one squeeze move to one of the direction. It could have been to the downside also. Like the model is not telling you in which direction. For that you have to see how this session is playing out. So in this case we have an upside squeeze. So I'm looking for a long entry. Here already you could take a trade based on this assumption. I'm not taking a trade here, but that could be an idea over here to show you a little bit how you can even trade before the DR session is finished. You don't have the probability because the DR is not given here, but that would be conclusion out of the relationship between the DR sessions. Taking a trade here with long stop below here would definitely not being a bad idea. For me, I want to wait a little bit longer, and that's wrong, obviously, as you can see. But anyway, so you see what I meant? Like taking this trade would have been definitely a good trade. DR session is finished and we already have the confirmation. So we are looking for longs only as expected. So we have a little volume imbalance here, and there are two. Like we have this one and we have this one. And that's also the 50% level. Let's see if we will get a retracement into this area. And if yes, then we will take a long. Directly going to the next 1.5 standard deviation level. Here volume imbalance, so we know price will come back. So if I see a clear rejection now that we already extended, I'm gonna look at these two levels and I'm gonna see if there is a clear rejection. Maybe I will enter long directly here. Else I want to see price come below here and see what is happening. Even maybe this area could be interesting. So we have the one standard deviation and we have the opening price over here. So these are the three areas. Let's look if we see a rejection here. Let's see if we see a rejection here. And then last point we're looking for long would be here. So this is not a clear rejection over here. We stay below this volume imbalance and we are not clearly rejecting. And now we are breaking through and we are coming directly with one candle to the levels I said could be interesting. Still not enough for me to take a trade yet. We are breaking below. Still nothing to trade for me. Still nothing for me to trade. So now we have 1, 2, 3. We are seeing rejection over here, but we are looking for a long, so we are not really interested in the short rejections. Again, price is driven down and rejects exactly from the open price and the one standard deviation. So I will take a long here. Stop 2 ticks below this last low. Target would be a new high. See, that's a 2R trade. Let's see how it works out. And we are filled. Next trade done. That's it. So we have a new high, 1.5 standard deviation. Let's see what price will do. It's 740. So I don't like entering. I mean, there are days when price is really expanding to the downside and you could re-enter at those levels, but that's not usually what I like to do. I do expect that this level will hold. I don't think that we will see a big come down, but still there's another volume imbalance over here. This would be a very strong area to not go through. So let's see how it turns out. And we are waiting for RDR then. And exactly -2, 2 standard deviation. That was a quite nice ODR session and ADR session so far. So now we are starting into the RDR session. And in general, I would expect price based on this model. 2 things you see here. So first of all, the model is telling us we are going upside. So this is not range expansion model per se, because this was happening inside of the RDR, but it's the contraction. So we have the squeeze to the upside. So what is very important to look at right now is over here, this was like a significant high. This was a very important high which was taken. When you see this, you always have to look what price is doing next, because like this was a significant high which was broken. liquidity was taking, 2 standard deviation reached. So let's see. That's definitely something you have to look for. So the RDR is opening. We are reaching these levels over here. This candle here, so we have this one here. We have 0.5. We have the IDR levels. We have, if I would extend these lines, we would have this here. So I would take a long here. Just based on what I said, there is a chance that we will expand higher, but these levels have to hold now. This is the level which price has to defend and the algo has to turn around. That's just the logic behind all what I'm teaching. So I would take a long trade here, directly stop below this level, 1, 2 ticks, and my target would be up here. So I would be stopped out. So now this is a very important point. We are literally broke through everything which should have helped the algo to turn around. We take out this cluster, we take out this cluster, we are breaking through all the levels from the ODR session. So now it's looking quite bearish. And like you see the effect from the buy side liquidity up here, which was really important. That seems to be like a very important swing high based on the reaction of price. RDR looks very bearish. So let's see what we are getting. I can remove these lines for now. 10.20, one more candle, and the DR is done. Price definitely wants to go lower. We take out the sell side liquidity even over here. So you have to understand, like, that's why I'm talking squeeze. That's why I was not talking about range expansion. This squeeze model is literally to engineer liquidity. And that's exactly what we have seen. So we have the squeeze. Imagine that there are stop levels all over here. So people who were shorting from these levels, they all have their stop somewhere in the middle, like either here, here, depending on where they have their stop. It doesn't matter where they are. This squeeze tells us that we will see a squeeze reaction into one direction. And that's exactly what we have seen. So we are squeezing literally, we're collecting every single stop on the way up here. So all the people who had their stops and still in their short trades, they all get stopped out, and liquidity is getting engineered. And on the other side, people who are going long and still are long and not selling up here, they will be having now their sell stops for their buy trades over here somewhere. We squeeze up, we take all liquidity plus the liquidity which is sitting on top, which is most probably the biggest one. And then we reverse and we go down and take all the people who have been long and have like staying in their positions and not taking low hanging fruits. All of them will be killed in a very short time period. So that's liquidity engineering, and that's like also the contraction model here. Contraction model, expect squeeze reactions, and that's a squeeze reaction. So we are squeezing literally the short sellers over here, and once we reach this area, we are squeezing for the buy sellers over here, the buy orders we had over here, which have their stops over here. So we have no confirmation. Let's see how price will continue. Here we have the ADR session low, so normally price should not go over this level anymore. This is a very good level to reject from. I saw it too late, so no trade. So now we have confirmation. Now we are allowed to look for trades. So nothing interesting yet. We are returning here, but we are not able to close above the IDR levels. There's one rejection, I don't know. Maybe I want to see one more. There are a lot of rejections over here, but not interesting to me. So we go above. I guess now I have to take a trade. So we have all these rejections down here. There's also volume imbalance if you look closer over here. Which is like by magic. You have to ask yourself, how is this possible that they are aligning so much with the IDR level? It's literally to the tick on the IDR level. We see the rejection over here, that's also the IDR, so we'll take a short trade. We will enter here, and our stop will be 1, 2 ticks above this volume imbalance. So we are going one more time into the volume imbalance here, getting rejected again. Target would be of course 0.5 and a new low. So trade would be already 2.5 RM plus, so we're gonna put our stop on entry and stop out, so break even trade. This circulation around the DR line, I normally don't like it, I don't like to trade it that much. So I want to have it at least going up here to take another trade. Again, let's see the next candle, the 1, 2, 3, 4, 5. That's the 6th rejection from this level. And the 7, so we have to take it short again. Doesn't help. Target 0.5, 1, 2. Let's see. And stopped out. If you have looked at my backtesting videos, like this is a pattern I really like to see. We go above the IDR level and then we immediately take it back with the next candle. And the candle which is taking us back is bigger than the candle body of the one who was closing above. I will enter, target will be 0.5 standard deviation and a new low. So now nice rejection again, and we see the same like the disband. I really like the candles over here. So that's normally a good sign. Let's see. We are staying below the DR levels now. What time is it? 20 minutes till market is closing. 10 minutes to close. Market closed, so we are selling over here. That's 1 point, let's say 1 hour. That's fine. 22 hour. Good.